Hello everyone, and thanks for tuning into the Financial Investor channel. My name is Brent, and today we're going to be covering our stocks with ex-dividends next week. So every week we go over 40 stocks over using Dividend.com. I made a video on how you can get all sorts of information off Dividend.com, payout ratios, how long the stock has been increasing their dividends, what their increases are like, and so on. So I made a whole video using Dividend.com. That's up in the top right corner. We screened AT&T and kind of showed how ex-dividends work and how that's how the dividend payments were removed from a stock on the ex-dividend date. So that's all in a video, top right corner, if you guys would like to click on it. Now today we're going to be using Dividend.com. We're going to be pulling off about 40 or so stocks that have ex-dividend dates coming up next week. So all we need to do is buy the stock prior to the ex-dividend date, hold it until the ex-dividend date, and then we'll be eligible for that dividend payout the following, whenever they're due to pay out. So we're going to be screening for 40 some stocks, looking for price to earnings ratios under 25, yields over 2. Then we're going to be looking for increasing revenue, net income, free cash flow. And then that's going to give us roughly, that can give us roughly 3 to 6 different stocks. And then we can do a deeper dive, or you guys can do a deeper dive into those specific ones, because at that point we would have covered 40 stocks that some of these you may never even heard of, on the headline. So that's why we do this whole segment. And let's go ahead and get into it. So I have two websites pulled up, Y Charts on the left, Dividend.com on the right. Now we're going to be using Dividend.com first because we want to pull off some stocks to screen first. So what we want to go is go to Dividend.com, click on our ex-dividend dates. From here, I'm just looking for some common shares, and then we're going to be looking for some stocks coming up next week. So 26 through the 30th. Man, we're already through March. Can you believe that? 1/4 of 2018 already gone. And so common shares there selected. We're going to hit search. Now, if you have a login for this website, you're going to be able to see these DARS rating. Now, I've explained this in all my past videos that I've done, and essentially DARS rating is the strength of the dividend stock. How long has it been paying out dividends? How are the increases? Does it increase their dividend by 2%, 5%, 8%, 10% per year? How strong is that dividend growth? The payout ratio, the next 4 quarters, are they looking to be profitable? It goes and measures all of these little, it gives them a rating based off the statistics. Now, I don't know if the grading scale is down here anywhere. It is not, but it is on a few other areas. I've talked about it in the past when I believe I covered Dividend.com. I think in one of my earlier videos we did talk about how it scores it on the DARS rating. So let's go ahead and see here. So we have a DARS rating of 5. Actually, let me go ahead and pause the video. I'll go look for that measurement and we'll come back. 1 second. Okay, and we're back. So here is the DARS Dividend Advantage rating system. So the relative strength. So again, measuring the stock, how it's been closing close to 52-week highs, the overall yield attractiveness. This is 1. So it doesn't want stocks. Hold on 1 second. Okay, wifey called. How to get that? So we covered the yield attractiveness. It doesn't want something very risky over 10%. These can be stocks that have recently plummeted in price, and their payout ratio, or their dividend that they pay out compared to their price, gives them a very high yield. So this can be extremely risky. And then we'd also want to make some sort of return off these dividend stocks. So it doesn't like stocks that have a 1% yield or less. And we actually screen and remove stocks that have a less than 2% yield. Talks about dividend reliability. How long has that stock been paying out dividends? Some have been paying out dividends for more than 60 years. Dividend uptrend. What is the chance that dividend will continue to increase over the long term? There are some stocks out there that recently increased their dividend by 10%. So if you held that stock by the rule of 72 for 7 years, your initial dividend payout, say $100, if you bought a stock and it pays you out, you put $10,000 into a 10% yield stock that's very high, but you got paid out let's see, $100 in 7 years. Your $100, if you never put more money into it, you would get payout. That dividend increase would give you $200 instead of $100. And just over that time, you would have been able to reinvest those dividends, buy more shares, increase your dividend payout. It's a whole compounding effect. And then earning growth over the next 4 quarters. So this is what we measure here, and then we're looking highly recommended, our 4.6 to 5, recommended 3.6 to 4.5, and neutral are 2.6 to 3.5. So we're looking all 2.6 is the bottom of the neutral. So we're going to be including all the 5 to 2.6 rated stocks inside of our screening process. So let's go back over here to our ex-dividend dates, and let's go ahead and screen. Boy, there are a whole bunch of stocks here. So 2.6 would get us all the way down to PIGA. Never heard of it. That's why we do the screening process. So all these stocks here that we're sliding through, there's several of these stocks. So what I'm going to be doing here is instead of all I'm going to be doing here. Okay, so I'll show you what I'm going to do. I'll start with the top one, and on Y charts, I have a whole video on how you guys can access Y charts for free. It's a link on my website, so it gets you onto there, and it comes with all my financial metrics that I use to do the screening process, and you guys can access that for free. So go ahead and check out that video, top right corner, or one of the corners. Click on that, watch that video, and then have access to do this yourself. So again, all I'm going to do here is enter the ticker symbol, and that's it. Just going to go ahead and go through here and enter all these ticker symbols in. So this process here probably takes the longest out of it all. UMPQ. So got to make sure you type these in. So if you can read and type at the same time, you are well ahead of the curve. So ZBH. And I'm going to go ahead and pause this video now at FSV, and then I will go ahead and enter in the remaining ones and then come right back. Okay, and we're back. So that took quite a while. There are a ton of stocks here. This is probably the biggest list I have ever done over on Dividend.com. So there is probably around 50 or 60 stocks here. So now that we have them all entered in here, next we're going to just strictly be over on Y charts now. So what we're looking for is we're going to be screening these first for price to earnings ratio higher than the average, the S&P 500 average. So the S&P 500, it sits right around 27. I like to use 25 as sort of my cutoff ratio. So all I'm going to be doing is enabling PE ratio here, and then what you're going to notice is we have way too many stocks currently checked. This can only handle around 10 stocks at a time. So all I'm going to do is begin unchecking all of these stocks. Now we have several tens of 20ths of stocks. I'm not sure, quadruplets, dozens of stocks here. That's a good one. Dozens of stocks here. A couple of these I do recognize. Let's see here, but many of them I do not recognize. There's many, there's much more. Activision Blizzard, that's one right there that I do recognize, but there are many here that I don't recognize. So there's much more that I do not recognize than are actually recognizable. So I'm sure there's many here that you may not even recognize. So we're kind of thinning it down here. We should actually start to get a list here. So here we are. This is what we're going to be looking for, and all I'm going to do here is slide in here, and now it's kind of blown up. So all we're going to be doing here is the PE ratios on the right hand side, and then the color here, the cypress, that's the one we're going to be removing, and that'll just remove it out. So all we're going to be doing here is getting rid of these ones that have PEs over 25. So now we have Stanek, and now this is our first process. So there we are. We have PE ratios less than 25. Now all I go ahead and do is uncheck from the top and then recheck the next 10 or so. So this process can take a few minutes to kind of go through and do, but we're screening nearly 60 or 70 stocks very quickly, and we're going to end up with some stocks that have PEs under 25, yields over 2, growing revenue, growing net income, growing free cash flow. So first service here is out. Let's see what's next here. 38 Wills Tower right up at the top. So this is the whole next here, Deer, DE. So if you guys are invested in some of these stocks that, the ones I'm not very familiar with, Danaher, don't know that one at all. But I'm not worried about in the fundamentals of the company right now. All I'm worried about is getting the the fundamentals, the financial metrics of the company are what I like to screen for first, and then I'll kind of dive into what exactly does the company do. Go over their 10Ks. So this one is very close, sitting on that PE ratio. Electric Holdings, that's a utility. I'm not, I don't care much for utilities. 25 is my cutoff, so I'm going to go ahead and just remove it. And it's not going to be here. Anything over 25, I'm just going to remove it. If it's 25 at all, it's just going to be gone, because we want stuff that's out of value right now. So there's a 200. That's probably some Activision Blizzard. Yep, that's the one. This is one I owned several years ago. It did very well. Ran up, I believe, over 100% at the time. So very good stock. Paid out, I think it's a semi-annual or annual dividend. I remember I got a very high dividend payout, and I believe it's because they only paid out dividends one time per year. I wasn't a dividend investor way back when. I was strictly in it for the capital appreciation. So I owned stocks such as Activision Blizzard, Weight Watchers, Amazon, Facebook. I had all the FANG, Google, and Netflix. I had all those. So Curtis here. I recently switched over to dividends in 2017, and kind of going from there. So here we are. So now we got the next batch kind of finished up. So now we're going on to the next 10 here. Now, this process, again, it takes a little bit to kind of screen through these. I'm going to go ahead and zoom out just a bit, because now I have to. Boy, that one has a PE ratio of 2200. Flowserve, have never heard of that, but some of these can be a little bit off, and that's fine. Johnson & Johnson's out there with a very high PE ratio, so maybe their earnings in the last quarter kind of made them kind of screwy, but at the same time, we're screening so many stocks. I don't want to nitpick which ones. I'm going to go ahead and think that I need to research a bit more and find out why their PE ratio is showing up so high. We're going to end up with a good list of stocks anyways at the end of this, so I'm not worried about if it has a PE ratio over 25. I just go ahead and remove it, because there's so many options here, and these are many stocks here I've never heard of. They're not in the media. They're not talked about. Edison International, this is actually one that I currently own. It has not been doing very well due to the interest rates currently, due to rising interest rates. It has a lot of debt. It's California based, and due to the fire that happened back in, I believe, like November time frame, the stock did come down a lot. That's what made me get into it, because I believe that it would recover after the fire had kind of cleared up. They had a lawsuit, but it just never recovered. It did recover from its lows, but not enough here. So Allied Motion and Medfast here. So I think I will go ahead and pause it. Instead of rambling on here, I will pause it and come right back after my PE process is done. So you guys, if you guys would like to check out like a whole other batch of the upcoming month, just a month of, this is why I do it by week, because there's so many stocks out there. And if you look at a month, you're going to be screening through a whole bunch of stocks, and that's fine. But you're going to be narrowing your search down to just a few. So I think this process is really good, and yep, going to go ahead and pause it. Okay, and we're back. So we've thinned this list down. There's still a ginormous amount of stocks in here. So what I've actually should have done is probably not taken so many, but that's fine. Now the next step here is I'm going to go ahead and clear these out for dividend yields. So I select roughly 10 or so stocks and look up their dividend yields. So I'm looking for dividend yields that are under 2, and I'm going to go ahead and remove those. So you can see right off the bat, we're going to be removing many of these here. So we have Republic Services and this Humana at the bottom here. So what's nice is many times these are labeled in the same order that there are over here. So Fifth Third here, this gray one here, is at the bottom. So all you have to do is look for the this dark red, and then it's the second from the bottom, so you go ahead and remove it that way. So I'm going to go ahead and do a few of these with you guys. So I'm going to just removing them through here, and Bank First, and then kind of just pause it again and go and do these on the offline here. So here we are, yields over 2%. So again, kind of uncheck the first top couple and then recheck the next 10. And there we are. Okay, so I'm going to go ahead and pause the video, and I'm going to go ahead and continue screening through these through a yield over 2. So I will be right back. Okay, and we're back. So what we've done now is we've screened from roughly 60 or 70 stocks to right around 15 now. So we've screened them for PEs over 25, dividend yields over 2. So all these stocks here now have dividend yields over 2. So the next thing I like to screen for is having revenue, free cash flow, and net income positive over the last 10 years. So we've done, we've had a really great market. We came out of a recession back in 2008. So I'm going to go ahead and select these individually and see, make sure that their net income is up, their free cash flow, and their revenue. So right now, this company's revenue is currently down, but their net income has climbed by 229%, and that's pretty recent. So maybe they're increasing their prices due to inflation or something, but their net income has increased dramatically here. So not to remove it because of the revenue, I'm going to go ahead and see what some of these other ones are. Okay, so we do have some positive ones here with positive revenue, free cash flow, and net income. So I'm going to go ahead and just remove anything that has a negative. So this has negative revenue. I'm going to go ahead and remove it. Now, Fulton Financial, never heard of it, but it does have increasing revenue, has increasing free cash flow, increasing net income. So I'm going to go ahead and skip over it. This one, decreasing net income, decreasing free cash flow. So if you're invested in dividend stocks, you want to make sure that they have a lot of free cash flow on the books. They want it to be positive, because if all else fails, that's where they're going to be paying those dividends from, is their free cash flow. So that's where they pay their dividends from. You want that free cash flow up in the positive in order to withstand these downturns in the market. So here, increasing revenue, increasing free cash flow, increasing net income, all very nice over the last 10 years. Positive in that one as well. So I'm going to go ahead and go through these very quickly. Anything that has a negative here, I go ahead and remove it. This one has decreasing free cash flow by 188%, decreasing net income by 9%, and their revenue has been steadily going up 10% roughly per year, but their net income isn't going up along with it. So all positive here. Huge free cash flow here, 784%. Chubb, never heard of that one. It is positive as far as free cash flow. It's been very minimum, but at the same time, it hasn't really lost it. It hasn't really gained it. Whereas their revenue and net income is very positive. So I'm going to go ahead and leave that one as well. US Bancorp, very nice one. Steelcase, positive there. We have decreasing free cash flow, 236%. Go ahead and remove that one. AXS, decreasing free cash flow, decreasing net income. Cardinal Health, positive there. Their net income has been pretty stale over the last few years. You can see here over the last 10 years, it is in the negative for the net income. And this is one I know I've seen a couple other YouTubers talk about it. All we're doing right now is just looking for these stocks here that we can kind of investigate even further. They have good fundamentals, rising net income, rising revenue, rising free cash flow over the last several years. They all have PE ratios under 25, dividend yields over 2. So there we are. We're left with 1, 2, 3, 4, 5, 6, 7, 8 stocks that have increasing revenue, free cash flow, net income, price earnings ratios under. Actually, we can just pop it all in there. So let's take a look at all of these here and take a look at their PE ratios. Oops, we are in percentages right now. So let's go ahead and switch back to data format. So I like to use percentages when I'm measuring over time, and I like to just look at the unchanged, the original format here when we're looking at just numbers. So PE ratios for all of these, we have UMPQ Holdings at the top at just 20 PE, and at the bottom we have OFG Bancorp at a 13.32 or 38. So that's pretty good there. Forward PEs of these, let's see here, 16s to 20s, again, OFG at the bottom. And who is at the top? UMPQ is still at the top, so they stay pretty much in the same order here with the first one and the end one. One other thing, a couple of these are financials. I've seen people that like to look at their price to book value. So a price to book value underneath one means that their book value of their company in comparison to their price is actually under. So if they sold everything at their company, they would actually have more book value of the company than the current price of the stock. So right now, OFG is rated below a 1.0 rating. So this could be one to look at if you're a value investor looking for stocks underneath one. Looks like it was trading above one for quite a while and then recently dipped down below one some time ago. So interesting there. One other thing I like to look for is a price to yield. So over the last year, has the price been consistently trading over the yield? So right now, if the yield sits above the price, I like to look at it as the yield is currently over the price for the average for the year. So Fulton price is over the yield right now. Umpqua Holdings price is over yield. Town Bank yield is over price. So this stock right here, this Town Bank, has came down very rough in price ever since October. So while they do have good revenue, their free cash flow and their net income, is in several millions and has been climbing over the last several years. You can see here it's all positive. Their net income here in the purple has been slowly climbing, their free cash flow slowly climbing, and their revenue up here again climbing up. But their price has recently declined by X amount. So let's see, go ahead and remove these again. So this could be a good opportunity to look at for the year. What caused this stock to come down so hard over the last couple quarters, and then what have they been up to in the 10Ks over the last several years? So right now this one does look like it could be a good potential investigate a little bit further because the yield is over the price. ITRN, the Turin Location and Control, price over yield right now, but it's very close. You can see it does kind of fluctuate right now where you can get a yield sometimes over 3.5 roughly. Chubb here, CB, yield over price. So again, this stock came down. I'm not really sure what this company is. We'll actually go through and do this. So yield over price, Bancorp, yield over price, Steelcase, yield over price. You can see here that this company was up in the high 16s or maybe 17s before coming back down into the $14 range. And then OFG Bancorp, price over yield right now. So let's see here, which one of these, if we wanted to be over the shorter term and look at their revenue and free cash flow and net income, and then, so these just show their numbers. So 783 million, but that's something fun to watch. I like to look at just percentages, how it's been over the last several years. So over the last 10 years it's been positive. Over the last 5 years it has gone down. Free cash flow coming down, it's still in the millions. This could just be due to acquisitions that are taking place. It's a financial institution, so I like to look at it over the long term and these numbers. So now that we have our 8, let's go do a dive here, and all we're going to be doing here is Control and F and then looking for our stocks on our list. So Volt is our first one here, and then Umpqua. So I'm just going to go ahead and open all of these stocks here in a separate tab, and then we can go over how long they've been paying out dividends, their payout ratio, their current price, and a few other metrics here. So CB, USB, SCS, okay, right here, and then OFG is our last one. So where is OFG? Should be right on down here. There it is. So the first stock, Fulton Financial, been paying out dividends for more than 7 years, or they've been increasing dividends since 2011. So they've been increasing their dividend for the last 7 years. Their payout ratio is 38.4, which is pretty good. Dividend yield 2.54, payout ratio 48 cents per share each quarter. So they're due to pay, their ex-dividend date is on March 29th. So I guess we could cover quite a bit of information on these ones. So what I'm going to do is order these, rearrange these in the ex-dividend date. So hold on right back. I'll be right back. So I've arranged these in order of payout or ex-dividend dates. So 26 is Monday. So I believe we only have one stock here with the 26. So ITRN. It has not been paying out dividends for more than a single year. Their payout ratio is very low. Their ex-dividend date is on Monday, so if you do want to buy them, you have to, for the ex-dividend date, you'd have to buy them on Friday or prior. Their qualified dividends unknown, meaning that if you bought them, the tax rate on them, you'd probably have to pay your regular income tax. So because this one doesn't have rising interest rates, rising dividend growth, I'm gonna go ahead and just remove it from my list. So that was iTrend. Going back to white charts here, I'm just going to go ahead and remove it from our list here of stocks that we would look at further. So next is Town, growth for the last 6 years, payout ratio over 28. That's all nice. Dividend yield, this one shows 1.9, so this could be due to the day. So let's go back over here. Town Bank, what was our dividend yield looking like on Y charts? Dividend yield looking like 2.34. So these are some different numbers here. So they said 14 cents here. So Town. Looks like the same stock. They pay out 56 cents every year. Okay, so this is annualized payout. But it's been a while since I've done these on my website. So this is per year. So every quarter it's 14 cents. So if we divide 56 by 4, that would give us 14 cents per quarter. So this is showing a yield of 2.34, whereas this one's showing a dividend yield of 1.9. And they may have cut their dividend. No, it still looks like they pay out that 14. So interesting there. Next one is CB. Dividend growth for the last 52 years. So recession proof. Been through multiple recessions. The 2008, the 2000, I believe there was one in 96, and maybe a few in between there, but dividend growth for the last 52 years, payout ratio over 26%, which is very low. Dividend yield of 2.01. So great looking stock right now. And see, over the last year, let's go ahead and get rid of that. So it is trading. The price has came down recently over the year. Ever since February timeframe, the stocks has been on the decline. But again, look at this dividend history. Let me go ahead and just show you the dividend history here. I can pop out the price and the yield here in just 52 years. It doesn't even go back 52 years, but all the solid increases here. And these little dips in the dividend, that's probably because they had stock splits. So yeah, you can see these stock splits, 2 for 1, 2 for 1, and they continue to pay out the same dividend payout for those shares. So great looking stock right there. Definitely worth looking into, especially because the yield right now is over the price, meaning that the prices came down recently, and this could be a good buy. So when's the last time we had a 2% yield? Let's see here. Looks like there was some time ago. This is just an increasing one, but there was a time when you can buy this stock in the 3% range, but it doesn't happen very rarely. So this could be a good buying point. So let's go ahead and continue. What's next? We have Umpqua Holdings, 7 years, 59%, payout ratio, dividend yield of 3.5. Their ex-dividend date is March 29th, March 28th. So March 28th is next Wednesday. So you need to buy this stock on Tuesday or prior to be eligible for the payout on the 29th of March. So same month. The ex-dividend date. Really? April 20th is their payout ratio. Umpqua, 7 years. We've already covered that one a little bit. 7 years here. All I'm looking for is ones that have paid out for more than 10 years. So CB is the only one that has paid out for more than 10 years. Number 2 would be 7-year ones. So all these 7 years. Whoops. Let's go ahead and clamp it back. There we are. So Now we have them ordered in dividend growth. So CB would be the first one that has had dividend growth for 52 years, followed by Fold, Umpqua Holdings, U.S. Bancorp, and Steelcase Inc. And then 6 years would be Talon Bank, and 4 years would be Oriental Financial Group. So those are the stocks we're going to be. We've screened 60 stocks. We're left now with 7. So I'm going to go ahead and post the information below in the description if you guys would like to take a look at these over at dividend.com. You guys will just be able to go over here, and I'll have the tickers, the price, and the yields right now. And then in the following months, when these come back up again and we do this whole screening process, we can take a look at where they were using this video and then where they're at in the future to see if these ones have made good progress as far as price and dividend growth, and kind of go from there. So that's it. We've had a very long video, so I'm going to go ahead and cut it right there. Again, I want to thank everyone for watching up to this point. Sorry the video was so long. If you did enjoy the video, hit the like button below. Please remember to subscribe for future financial videos. If you have any questions at all about anything that was covered, the screening process that I go through and such, this is very basic financial, using financial metrics to quickly screen down 60 stocks down to just 7. So as a friendly disclaimer, I am not a financial advisor or tax professional. The information provided is my opinion for entertainment and fun. This is not investment advice. This is just me as a financial investor try and help others make their money work for them, looking for some great dividend stocks that have rising interest rate or rising revenue, net income, free cash flow, PEs under 25, yields over 2. So overall, good looking stocks as far as financial metrics go. And then you guys have to take a look at their 10Ks, go over their quarterly earnings and such. So that's it for this video. Thank you guys for tuning in. I will see you next time. Have a great day. Bye.